Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is Thursday. Wow, another down day. Imagine that. Over this weekend, I don't think anyone imagined that the market can go ever down again. If you recall, I think if you read on my Twitter feed, Sunday, after a whole weekend, which I talk about fitness, family, fun, I was like, let me do some reading. Let me see what's going on this weekend. Let me see where people's heads are at. And as I'm reading, all of a sudden everyone's talking about how the VIX is so low, and it doesn't really matter. The Bulls-Bear survey started to get so damn lopsided, whereas at 1860, 1870, it was a big problem. At 1950 over the weekend, nobody seemed to care about it. So right there, that was a little red flag in my mind that, you know what, this week could be a tricky one. Let's see what type of action we have. Then on Monday, talked about in the morning call how the oscillator was plus 70, the highest level since 2012. Also talked about the RSI being plus 73 on the SPX, which only happened 1.76% of the time in the last 20 years. So that means 1% of the time, or almost 2% of the time, we've been at those elevated levels over 20 years. What does that tell you? Maybe, we could shake the tree a little bit. So you combine that with the World Bank cutting their forecast, the IMF were a little worried about housing. Combine that with what's going on in Iraq, with them taking over a few cities, and then all of a sudden Pakistan with the airport. And what do? We pulled down a little bit. But in technical land, what did we really do? We went from plus 73 to neutral. Nobody wants to chase the market. Nobody wants to buy, and hold the bag. And now, you know what? We're all going to have the same chance to potentially buy a dip, but you're going to have to know how to do it. You're going to have to know the setup. You're going to have to map out prices, look at leaders, and now it's when it gets fun again, because it wasn't that fun. A stock market's up 14 days in a row. You don't want to buy, you don't want to chase highs. Most things that were tight, we're already on day 4 to day 8 of a rally, and our system, we like to buy day 1, add day 2, trim day 3, and then try and stick around. So all in all, a decent pullback. I don't think we crash. I think this is buyable, just the question is how. So there are a few things we know, a few things we don't know. One of the things we know is that since we broke out above 1900, the S&P followed its 8-day moving average. So look here at the chart of the spiders, and you will see here is where we broke out. Okay, let's just go back here, because you want to talk about what you know and what you don't know. When we were right here in this part of the S&P or the SPX, we didn't know whether or not this trend line would hold. Okay, we could have broke lower. This is when everyone was really bearish. This is when the VIX mattered. This is when volume mattered. This is when everyone was, calling for the correction. And then you had a nice wide range bar, which put us back in the neutral zone. And then you had a breakout above, the range here, a range that was in check for 3 months. And then from there, what did? We followed the 8-day moving average. Okay, so this was the trend, right? We followed trends. Trend to the upside. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Out of 14 days, 1 red day. What does that tell you? A little overbought. Here we were extended from the 8-day, from the 21-day. Oscillator screaming. Get a little careful. So what also did we know? We knew upper level support, which is typically hard to hold. Yes, you know what? It held right here, right? Upper level support held right here, because this was part of the beginning stage of a breakout, right? We only went from 1900 to 1927. So next time, sometimes it doesn't hold as easy, right? Because look at the size of the move. So you had to be a little bit careful. This was 1943-ish. So what happened today? Wide range bar to the downside. So we traded below 1940, which was the prior day low. We broke the 8-day, which we talked about, which happened to be somewhere around 1938, and closed all the way down into another area of support. Still above the 21-day, and still above this last breakout. That's where we kind of held. So what do we do from here? At this point, I was hoping a close in the low. I was hoping that we'd get some kind of down open, so this way it would be an easy trade tomorrow, because we didn't get caught, holding the bag here. So thinking maybe down open into the 21-day, reverse up, and then rally back a little bit and then see what's next. But we'll see. So you look at other sectors just real quickly. Look at the financials. So far, not really the end of the world either. What did this do? All it did is come back and retest this prior breakout. So if you were short, hopefully you covered a little bit here. Now we'll see if we rally up off of this. The IWMs also, here, not the end of the world. I see a lot of doomsday guys out there. What did it do? This actually only held the 8-day. This was a little bit stronger. Here was your breaking of the descending channel. Here was your bull flag, which we got above. And so far, this actually is showing some relative strength. The problem spot today was because of oil going nuts, so the IYTs got hit a little bit harder. So this has been a very strong sector with the airlines. So this broke its 8-day. So if you were trading this from the long side, as long as it followed the 8-day, no big deal for you, right? Because you broke the 8-day and that's your out. That's the accelerated trend. So what happened today? Broke below, and this is already at the 21-day. So right there, something worth noting. Okay, this is back at the 21-day. This is going to be a correlation problem spot because you have fuel prices going up, and that means it costs more money for all of these moving vehicles to go. You know, you saw something like UAL happen real quickly where it sliced to the downside below the 8-day. Once it's closed here, you know what? You could have got out of the way. Follow the 8-day. That's your trend. Once it closed below, you get out of the way, and you don't have to deal with today. JetBlue, just another airline, just to show you how things were somewhat severe. Same type of thing. This one you didn't have much of a chance, but you had your upper level right there. Broke below the 8-day. That was your out. You didn't have to deal with the rest of this noise, and chances are, the 21-day comes into play. So, we haven't been focusing on the airlines, but I'm just showing you where the weakness was today, and makes sense, right? Fuel prices up, transportation down. 8-day has been the roadmap, and now that changed. So you have to make adjustments and see what's the next new trend. Do we hold the 21-day, or do we bounce off the 21-day and then all of a sudden go to the 50-day? You don't know yet. All you know is if you got out of your positions when we broke the 8-day, then it doesn't matter. You could check out what's next and be flexible and be opportunistic. But let's go where we usually trade, and that's the social media stocks. And the social media stocks have had a really big run this week. We've had a few different buy prices. We've had relative strength. And then today, they showed early morning strength, some of them, and then pushed through a momentum area and failed. So I think you could use Facebook as a textbook example on how to use entries and exits and how to use price points. It's almost like a technical trading 101. If you were sitting in a big lecture hall and I was about to give a lecture and say, listen, let's look at the technicals of Facebook on when you could have entered, what it meant, and how you could have exited. So you look here at Facebook, you will see that here is the most recent move. Okay, so let's look here. Here is where you had this rising uptrend that right around here, okay, looked as if you didn't know. Was it going to break to the downside or break to the upside? You had a pennant after a move lower from this breakdown. Remember when it broke down right here? Let's remember that. That's where it broke down from. So not too sure what happened. Oh, wide range bar engulfed this last one. Let's go from bearish to bullish. And then boom. Okay, nice little breakout. So where did it go to? Oh, it went to a resistance. What usually happens when things go to resistance, especially after a move from just say sub 59 to almost 64? Might not get through there the first time. Goes sideways. Consolidates. That's what Facebook did. Consolidated the top end of this breakout range, so it looked pretty good. Then what happened here? Oh, look at that. Held support, held the 21-day. Let's get bullish. That's when I went back on my VTF. Boom. Nice breakout, right? Nice breakout. So this is your add point, okay? Above this price, which was 63.48, or even above 64, because it's a level it hasn't cleared in a while, and there was volume. So from there, okay, this was Tuesday, yesterday, futures were down 9 handles. Oh my goodness, what's Facebook going to do? Is it going to just negate it, negate the powerful breakout on volume, or is it going to hold in there? So what did Facebook do? We go back to the chart. Look at that. Nice inside day. Don't be too scared, Red Dog. You held it and it was the right thing to do. Okay? Top third of the range from here to here, but look also where it came from. So now the question is, does it trade above this 2-day pivot and extend, or does it trade above, squeeze some shorts, bait in some longs, and fail? Okay, and that's what my thought process was today. All right, it opened up like 25 cents or so. If you come back to me, Mr. Drew, and you know, I had a little bit overnight, so I sold some, but then, you know, Twitter reversed and some social media was stronger. So I was like, let me stay with this. So we tried to stay with it. I'm like, but if we get back below the prior high, below a momentum level, let me get out of the way. So what happened today? Okay, it broke above and then boom. Okay, but then if you also look at the bigger picture, what really also happened today, okay, remember this from off the charts, this little breakdown here, this head and shoulders top, look at what got retested. You know, from here we were like, oh, we should probably get to 66.10, and then once you're at 66.10, oh, maybe we can go to 68 or 70. You never know. So what happened? It pushed through and then failed. You could have got right out of the way when it went right back below this 65.80, a small red dog reversal plus an outside day, went to highs, closed on lows, went below this inside area. So that to me got me out of Facebook. And now it's still not the end of the world. I know Sperling still thinks it's okay. It might be, but the trade has changed. Now you have a little bit of an uptrend here. So maybe tomorrow it trades below today's low, gives you a little red dog reversal into the trend line. But the trade is different. It's not like, to me, a fast, furious, tradable breakout. Now it's back to little monotonous stuff like you had over here. But that's how, you know, you think about things going forward, okay? And all it did is from right here all the way back into it, it retested this, and now you have a lower high, and we'll see. You go back a few other time frames, and, you know, not the end of the world. You think about where Facebook came from, okay? And everyone thought it was, you know, so weak, but you look here at this trend line, all this did back down here is retested trend line after an enormous move from the gap up at 32. So anyway, now I'm flat. I'm not that excited. It's not going to be on my A play every day as it has been, and we'll move on. Twitter, though, still strong. Twitter, interesting. You know, Twitter has been a broken name. We've been long it today. I didn't really focus on it. What did it do? It actually went into the gap. Okay, and look at that. It touched the line that we talked about in yesterday's morning call. I said, you know what? It fills the gap above 36.10. Probably sees 37 and change, fills the gap for a good trade. Needs to see volume in order for this to happen. You go to your basic studies, you go to your volume, and look at the volume that took place there. It started off actually weaker because people thought, oh my goodness, there must be problems. They're getting rid of their COO, but I guess they used it as an excuse to rally it. But big volume, filled the gap. Did show relative strength today, so you know maybe it continues. I'm not long this one either. So right around midday, I did post a chart to Twitter of potentially, what stock were we looking at? We were looking at Yelp. Sperling loved it. It obviously has been a little late to the party because if it was a leader, it would have already broken out. But there was a chance that if the market didn't fall apart and we didn't break the 8-day and we held in there, it could play some catch up, but it didn't. So for me, I was long it, trying to get in there before, okay, a potential move. Okay, and this is the chart that we posted. This was your potential cup and handle, right? Where here's your cup, here's your handle, coming in right here. If it broke out above this prior level, I was thinking maybe you could take this out if the market stayed strong. Market didn't stay strong. Just, you know, get rid of the volume here, okay, just to, you know, so you could see it more clean. And you know, it kind of fell again. Does this mean it's over? No, it just means it's not ready to have momentum, and I'm playing this for momentum. I'm not sitting in it. If it were to get weaker, it would probably break below this little area. So if you're holding it for a swing and you didn't get out today when it went back below the prior high here of 66.95, then you better be careful if it were to get below 64.25. You go to the 5-minute chart to show you how quick it was. Okay, I actually went to the gym. So right here, okay, was looking pretty good, wasn't it? It was looking like I was holding here. You had your quick move to the downside, and then it came back up. Was holding tight, very, very tight, looking as if it might be able to get above 68. So I was long it. I went to the gym. I'm like, you know what? I'm going to give this a little room. First, stop really should be 67.50, but I'm going to give it a little bit more space in that. You know, it shouldn't get below 67.20, so I got stopped out at half there. And then I said, you know what? If it gets below 67.80, then it's not going to happen today. So stop 1, stop 2, and if you were watching the VTF, you saw it leave my virtual trade floor. I came in flatted. I bought it somewhere in here thinking maybe it can go, talked about it, and it failed. Then if you want to look what happened, boom, boom, boom. Stopped right out. Sucked. Happens. Sucks even more, if you held it for the rest of this time period. Okay, now you got to see what happens next. You're in the mercy of the tape. Right now it's not a breakout. It might need some more time. It might try it tomorrow, might try it next Wednesday. Who knows? But right now it wasn't the trade for the day, which is what I was looking for. So what do? I salvage it and move on. Apple. Been waiting for an entry on Apple and still hasn't given you one. I don't know why I did it after hours, but Intel came out and upped their guidance. So I saw some offers here, at the low of the day. So I took some. Ultimately, you look at this, you look at the 8-day. This is something that it's been following, and it just kind of broke below. So, you still got to be a bit careful. This has been the trend ever since the gap up after earnings. I've been pretty, involved with this one and gave us a nice extra trade right here, a nice extra trade right here. Haven't really traded it since. Some were short on the desk when it broke 93.55, and now it's at the 8-day. I was hoping for some kind of red dog reversal tomorrow where it trades below 91.90, comes back up, but ultimately it's on the right side of this trend now, and we have to figure it out. The composure changed a little bit. It's going to be a little slower. It's not going to be pent up the way it's been. Chances are it might even work its way down to the 21-day. But for right now, a subtle change happened. Pre-split, if you look from 95 to here, you're getting it like $25 cheaper if it was still, up at 6.30 or so. But anyway, took a little bit, so you'll see it at the bottom of the note. Just for full disclosure, I bought it at around 405 before coming in here, just because, I figured maybe if Intel, which has been very strong, that upped their guidance and tech gets a bounce, maybe, it's something worth doing. So let's see where Intel is now. This has been very strong. I guess somebody knew something. They should check into that. You go to the 5-minute chart. It is now up at 29.19. So where did I just draw that chart? 28.50. So Intel is at 2014 highs. So strong, strong, strong. We'll see. And then also spiders happen to be up 30 cents, so I shorted a little bit of that. So it closed here at 193.50. So if you saw me on the VTF, you're like, oh, Redler just got short. I shorted like 193.85, thinking maybe it's up 35 cents. We'll see what happens next. Let's go to the 5-minute chart. Where is that? So same type of spot. So whatever. I'm pretty light overnight, pretty neutral, and that's the way I wanted to be. I think tomorrow I'm trading in short hills. If we happen to get a 6, 7, 8 handle move lower on the open, I would probably be looking to buy it, considering we just came in from 1955 down to 1925, 30 handles, almost 2%. That type of scenario in a straight line is usually a reflex long. Doesn't mean it's a swing long, but a reflex long. Some people are thinking maybe Amazon tomorrow. How funny is this? Goldman Sachs. Okay, this is when we talked about it. This is when it broke above 315, and then this is when Goldman Sachs upgraded it. Okay, they came out and upgraded the stock right here. So from 290 to 330, that's 40 points. Goldman Sachs upgrades it. Boom. Topping tail after that. So what did that tell you? Goldman Sachs, considered the best banking firm in the world. They upgraded on this day after a big move. It closes on the lows, tells you it's a little overbought, and then this happens. Boom. So some technical traders took this to the short side, and now you're back into the 8-day. So maybe tomorrow, again, I was hoping for a little down open. I was looking to maybe buy it. You write down 324.66, and maybe tomorrow we get some kind of red dog reversal right here, and get some kind of entry, considering it's about 15 points lower from Goldman Sachs upgrading it. And in conclusion, you just got to realize that the market, speed, composure, direction, it changes at all times. We're in a fast-moving tape. We couldn't get a down tick 2 weeks ago, and now, in the last 2 days, spiders couldn't take up more than 20 cents. I think this corrective move is healthy. I'm not in the camp that we're going to have a 10 to 15 to 20% correction. I'm happy that we're pulling back to the 8 and the 21 day, which could give us a reset and better entries because these things were extended. I'm happy that we went from plus 73 to neutral. So now we're not as overbought. Now we got to figure out how to enter, how to be comfortable, how to use our time frame, and how to make money. And that's what we're all here to do. So then we could make money, get a good paycheck, provide for our family, have some fun, and continue to do it for as many years as you think you can. And you can do it until you're about 90 years old. All you got to do is have a routine that you like, do it every day, and follow a plan. Scott Redler, T3 Live, the recap. Have a great Thursday night. Enjoy the World Cup. I think Brazil might pull it off, but we shall see. I'm a little upset with the USA coach saying, oh, I don't think we could win. You don't say something like that as a coach. But anyway, have a good night. I will see you on the VTF tomorrow.